Tesla up $40 today, likely to finish the day out up $50 based on the follow-through of the 3-day rule. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. We wanted to note that this morning we had a discussion laying out why it was that we felt that Tesla would exceed 720 and head north of that. And by not being on Patreon, you're missing out on good investment trading ideas that might assist you in making more money. So we want to thank our Semi for joining us today as usual. We also want to thank you for taking time out to like and subscribe if you enjoy. So the first and primary thing I wanted to review here today is we have a concept that we call the 3-day rule. What that involves is the fact that typically there's a 3-day process that we go through anytime an analyst from a major firm decides to make an upgrade or strong statement about a stock. The first item is that the analyst in this case is what's called a buy-side analyst. So the people who buy shares, so for example, a hedge fund or Fidelity or some of these companies will pay X amount of dollars on a monthly or annual basis to get research reports from certain firms. And that's what sort of triggered this latest run for Tesla. So as usual, we kind of go into the nuances of how this works. So most of the managers are their portfolio managers that are large at all the major firms, you name them, Fidelity, etc., are minimum $1 million employees. The people who run the bigger funds of 100 billion plus are typically 10 to 20 million dollar a year employees. And they have an interesting problem. And the problem is that on a constant basis, they maintain a close command of what they think is going to happen with a certain stock, in this case Tesla. The next move that they do is they also pay outside firms to provide information to help them gather more info on things they may not already know or may know but want further clarity. So I have to admit, this is just kicking my... We're having some technical challenges here, so I'm just going to do a quick modification so that ends. So the problem that's happening is that we have a kind of an unusual circumstance right now, which is if you're a large firm and you make a decision to buy or sell shares and it works great, that's fine. If you make a bad decision, now you've got big problems because you're misinformed relative to other firms, and how you perform relative to competing firms can influence the number of inbound shares or buyers you get for your fund. So there's a CYA component, which is, hey, we already know what we want to do with this, but let's get a confirmation from other people. That way, if people ask you, why'd you do this? You can reference, oh, we talked to this firm and this was their forecast, and we're writing that forecast in our purchase. Now, one of the things I argued yesterday was the fact that usually you want to see at least 2 firms, if not 3 or 4, all going down the same path, because another thing that happens is all the analysts are graded on how good or bad their calls are over time on certain companies and stocks. And how you're graded as an analyst can influence how much it is you're paid by those funds for your research. So those are sort of a couple of background details on how the analysts operate on Wall Street. So the next thing that can happen, and we think that's happening here, is something we call the 3-day rule. So right now, this is the first time that we've seen over the last couple of 3 years, analysts putting up an $8 billion valuation to sales of large sort of power systems that Tesla puts together for different entities. It feels to me like one of the triggers was Apple just did a $50 million deal for dedicated power from Tesla for one of their facilities. And there's a lot more of these facilities going up that have similar sort of power drain issues. So there's a huge opportunity for Tesla. Now, I know you're going to ask the question, who cares about $50 million when you're a $600 billion firm? Well, the question mark that pops up is that a one-time event, or is Tesla continuing to rack up? Let's say they rack up $300 to $500 million a year in sales, right, in this space. Well, next, you've got to look at what their growth rate is for that business, so you get a multiplier for it. So I think that the $8 billion target number for 2025 that Tesla will be doing in these systems is not a big deal. I think the number is actually going to be higher than that. But what this just did is open up a whole can of worms where there are other firms that have to step back and go, wait a second, is this a data point, an analysis that we missed that now has to be addressed? And if we address it in the manner that the other firms did it, we also need to think about doing an upgrade. We may not choose to do an upgrade, but we have to start thinking about it. Now, I definitely think these are variables in why the stock price is rising right now. For me, a bigger variable than that, the note on the fact that, hey, Tesla has Apple-like pockets of revenue beyond the sale of cars that allow them to generate nice numbers. You know, that was the thesis that was presented, and so he followed through on that, including the energy business in this case. For me, I'd have to say that, yeah, they matter, and it's a different number that you can add to the value of the company based on things like autonomous driving, now power, etc. What is a bigger issue for me is if you had Tesla come out with certain numbers and they delivered a certain number of vehicles to customers, and that number is, let's say, 10%, 15% above what the forecast was for all those analysts. There's been a lurking question on Tesla, at which point are the analysts that were wrong by 15 or 20% on Tesla going to be forced to elevate their numbers to consider the fact that all the competitive destruction threats that were out there for Tesla are not happening, and the size of the market is increasing, and Tesla is sucking up huge amounts of sales in that space. So my answer to this whole thing then is that I think that's a bigger deal, because the numbers for 2025 aren't quite here yet, but they do make sense. And speaking of making sense, I mean, Tesla and Elon have been experimenting with autonomous driving, or mostly passengers just doesn't need to touch the steering wheel driving activity, for quite a while, and there have been a lot of forecasts about how big those numbers are going to be. I think it's entirely possible that this is the case and it will happen. One of the trends, like if you're in the Washington, D.C. area right now and you go to Dulles Airport, from what I can see, about every 25 days, a new data center is being delivered in the Washington, D.C. area as the government moves all of its data into the cloud. And so one of the challenges is those facilities suck down huge amounts of power. And a lot of firms like Apple and others have committed themselves to being carbon neutral over a certain time frame, you know, some nearer than others. I think a big part of this process is how are you doing relative to your whole solar panel operations, as well as, you know, storage, batteries, etc., everything that Tesla does. So I really think that there's a nice relationship developing between data centers and their need for power and Tesla's ability to deliver that power and the battery packs, etc. So I bring up all of this to you today because I think that the upgrade and then the upward movement of Tesla stock price is valid. I also believe, and I could be wrong, that we're in what we call a 3-day rule, which is there's a process by which the report is written. It is then handed to the money manager who paid for it. The money manager will then spend some time with staff reviewing what their forecast was and what the forecast is for the companies that have sent in their suggestions, in this case, Canaccord. And if both sides are in agreement with each other, they go through a process where they will actually distribute the buying of shares across a number of firms to reduce the ability of anyone to figure out who's buying those shares. So that process of going through meetings, reviewing, agreeing, etc., in our minds is about a 3-day process, and you see the biggest buying at the third, fourth, fifth day is possibly into the following business days. And because once things start to move, let's say for one firm in terms of their change up of buying process, that buying process can influence what other people choose to do as well. So you have kind of a feeding frenzy going on, like sharks where there's chum in the water. So I really think that we've kind of come out. There's something I've been watching, which is pick the top 10, let's say, Silicon Valley companies. And as of 3 weeks ago, when inflation was the biggest worry, all the major firms, including Tesla, PayPal, you name it, Roku, everybody lost as much as 50 points on their stock if they're above 300. But everybody lost about 20% of the value of their company during that period, with Tesla dropping to 592, as you know. Now we've seemed to come out of that dark storm where instead of firms saying we want to run for the hills, there are a lot of entities saying let's figure out who's still growing, who's still making good money, and buy back into them because they're selling at a discount currently. So it's my belief there's a combo issue happening with Tesla. Prices down, especially relative to $1,000 price targets of many analysts, so therefore it's at a discount. They've also shown great numbers, and the thesis of the new competitors coming in and potentially destroying Tesla has really proven not to be the case. And so then we add on this, let's look at what's happening in their power business and how much business there'll be there and how fast that's growing. And so now we have another sort of variable that's influencing, we might have been 20% light, but going over the next couple of years, we need to add bolt on another stream of revenue number that's appropriate to consider. And so you now have a valid reason why the stock price is up nicely. So I wanted to review all this with you because, we're getting a nice run today. Again, we could be wrong, but the argument we're making is that this thing still has another 1 to 2 days of up to go, with 20 or 30 points a day being real possibilities. So that starts to put us toward 800 a share as we close out the week as real possibilities if the market doesn't decide to just crash for some unknown reason. So I wanted to encourage you to start tracking this 3-day rule, because I really feel like right now we're off sync, because those analysts were supposed to do all their research work and upgrades within a day or two of last week's release of production numbers for the quarter. And I really think that it smells to me like there's a new sheriff in town saying people have really caught on to how this works. And we now need to find ways to shift away from the old process we were doing, because too many people are making money, too many novices or individuals are making money that way. So we now have to change up how this all works out. And it looks like give it a week, week and a half seems to be the new standard for Tesla. And we'll see if we continue to see this pattern, but it seems to have emerged as a new Tesla process over the last, let's say, month and a half, 2 months. And if you're trading, you definitely have to note these changes. If you're just investing, it's nice to just keep an ear out to this, but obviously you don't change what you're doing because you're long the stock and looking for long-term changes that end up sort of benefiting the company and stock. So we're continuing to evolve as a show, and one of the things we like to do is if there's big moves like this with Tesla, it's often a good idea to sort of institutionalize the moment, because you may want to come back and watch this video as we head into the next round of 3-day, because we're definitely going to see some things happening around earnings on the 26th. And I'm wondering if those analysts will sort of delay in this process and therefore slow down how much a lot of folks make surrounding Tesla's earnings and Elon being forced to answer big questions. At any rate, thank you for taking time out to join us for our 40-point up show today, and we think implementation of the 3-day rule. We also want to thank our Patreon supporters and subscribers. Please subscribe if you enjoy. We do have some SpaceX shares if there's interest. We also wanted to next get into our health tips. Wanted to encourage you to consider core training or core exercises as the day starts out every day. I've started doing them. It's gotten rid of some back pain I had. Also wanted to encourage you to consider a regimen of elderberry with zinc, along with vitamin D and vitamin C as a way to address some of the scary health challenges that are hitting for everybody. Also wanted to encourage you to consider a 2-5 or other fasting diet as a way to keep the weight under control, given that we're indoors more. Also wanted to mention the 25 leg lifts a day, strengthens quad muscles, reduces the chance of knee issues. Please also consider a salad prior to lovemaking, because the amount of blood required to consume that salad is much lower, and therefore that blood flow is available for other activities. So, at any rate, we look forward to your constructive comments on this. This is Greg for Teslafaninsight. Tschüss, German, au revoir, French, Lehithro, Hebrew, Hoda, Hafez, Farsi, Strazvicha, Russian, Ni Hao Ma, Chinese, Konbanwa, Japanese, Namaste, Hindi, good day, our friends in Australia. We also wanted to say hey do to our friends in Sweden. And in Jamaica, we say, enough respect, walk good, man. Thanks for joining us. Have a great day. Bye for now. And we look forward to your comments. And please remember to like and subscribe.